This is John Larson, Sales Director of American Real Estate Investments, and I'm going to walk you through the difference between A, B, and C class properties. Investors, lenders, and brokers have developed property classifications to make it easier when communicating amongst themselves about the quality of property. For investors, property class is an important factor to consider because each class offers a different level of risk and return. Investors use the differences in property class types to consider how each property fits within their investment strategy. This strategy is based on return objectives and the amount of risk they are willing to accept in order to achieve those returns. Each property classification reflects a different risk and return because the properties are graded according to a combination of location and physical characteristics. The letter grades for property are assigned after considering the following factors. 1. Age of the property. 2. Demographic location and crime statistics. 3. Average household income. 4. Geographic and economic growth projections. 5. Annual appreciation forecast. 6. Monthly rental income. And finally 7. Amenities. There is no precise formula used to place properties into certain classes, but here is a breakdown of how you, as an investor, should consider the difference between A, B, and C class properties. First, we'll start with A class properties. These properties are the highest quality buildings in their market. They are generally newer builds, usually built within the last 20 years. The areas have little to no crime and offer better school districts and higher appreciation to secure a more solid exit strategy. A-class homes are typically professionally managed and usually demand the highest rent with little or no deferred maintenance. A-class investments generally offer a 6 to 9% return and are typically $120,000 or more. If you're an investor looking for a truly passive investment, I recommend going the A-class route. Now we'll move on to B-class properties. These properties are one step down from A-class. These properties are generally older than A-class properties and therefore more prone to standard maintenance issues. B-class investments also tend to have a more blue-collar, median income tenant. The B-class investments will have your basic finishes and a low to medium crime rate. B-class investments tend to appreciate very little and generally offer an 8 to 11% net yield. These B-class investments range in price from $65,000 to $100,000. Due to a higher risk involved with these type of properties, you are usually able to acquire B-class investments in a lower price point than your typical A-class investment. Now on to C-class. C-class properties are typically much older than 20 years and are located in less desirable areas. These properties are generally in need of renovation or have been renovated very inexpensively. As a result, Class C buildings tend to have the lowest rental rates in the market. Class C properties have the highest rate of vacancy, late and missed rental payments, and deferred maintenance. They are the most difficult properties to maintain steady cash flow and are not a good option for an investor who expects a passive investment. These investments are very hands-on. It is also very rare that you would find a professional management company to manage these type of homes. C-class investments generally offer a 12% or higher return, but based on the elevated risk involved, these numbers are tough to achieve and maintain. It is important for investors to know and understand the different classes of properties and the different levels of risk-reward each option brings. Class A investments provide investors more security by knowing that they are investing in top-tier property with little to no issues that would involve further expenditures. These investments are usually easier to exit out of as well. Class A properties can easily be sold on the retail market to another investor or owner-occupant. Class B and C properties tend to be bought and sold at higher cap rates than Class A because investors are paying less for the additional risk that comes with owning an older property with lower income tenants and less desirable locations. Depending on what you're looking for as an investor, you need to identify that and match it with the correct property class. Investors looking for capital preservation and appreciation in their market, I would recommend a Class A investment. For investors looking for higher returns that are willing to assume the higher risk, Class B and C are better investments for that specific profile. Whatever route you decide to go as an investor, always make sure you conduct your proper due diligence. For more information on how to conduct proper due diligence when looking to invest in a cash-generating investment property, please take time to watch my video, 7 Things to Consider when Purchasing a Cash-Flowing Investment Property. This is John Larson, Sales Director at American Real Estate Investments. Thanks for your time.